Hello, my name is Mike Florin and I'm with Low Cost Mortgage. Today is your update for realtors and industry professionals for July 21st, 2023. So rates were on the downtrend Monday, Tuesday, Wednesday, and when something happens, it's really pressure, right? So if there's good news, right, or bad news for the economy, good news for rates, you'll have this downward pressure on rates, right? And if something happens, for example, on Thursday, every Thursday there's going to be unemployment numbers that come out, right? Well, this Thursday, unemployment numbers were a little bit low, so a little bit upward pressure on rates. So guess what happened Thursday? Rates went up a decent amount, not a lot, maybe an eighth to a quarter, depending on who and what and where your scenario is. But those rates already started to come back down, and you can see over my left shoulder right around here or so, it was downward trending, came up on Thursday, and then right back down again. So in essence, government loans for us, they're still high fives. I just locked one yesterday this was yesterday when rates were high, 5.75, and the cost was $270, I think, in discount. So a little bit of money can go a long way, depending on your individual scenario. And that's kind of pretty important. Other than that, it's just kind of a fairly flat week, not really much going on. You might see the industry start to get a little bit worse, or rates start to get worse in preparation for the Fed, next time the Fed meets, if there's going to be an increase or not. But typically what you're going to find is when the Fed increases their rate, mortgage rates come down the next day or two, and here's why. When the Fed's going to meet, everybody knows. And everybody sees the data that the Fed's looking at. So they're going to anticipate what they think the Fed's going to do. Well, in the mortgage industry, everyone's conservative. Everybody is planning for worst case scenario. And the reason why? In mortgages, the numbers are big. They are very big. So if a loan company screws something up, they could either, they could lose $15,000, $20,000, $30,000 for each loan, for each lock. So to hedge against that potential risk or loss, what they'll end up doing is they'll end up having rates that are higher in anticipation of something happening. So here's an example. All through the pandemic, for the most part, after the first few months, during the increase of rates, right? Everybody thinks that rates are going to go up 0.25%. So they take all of the entire mortgage industry will rack it up or increase interest rates on 0.5% increase of what they think. So when the quarter comes out, then they bring the rates down to what they would have been at a quarter, because they're going to plan worst case scenario. So if they think the Fed's going to go 0.25 point up, everybody in the industry, for the most part, is going to price in 0.5 percentage point. And then when a quarter is released, it comes down to the quarter amount. Or if an eighth is released, then it'll drop all the way down to where that eighth increase would be. Now, in all reality, the Fed doesn't really dictate mortgage rates, but mortgage rates are a consolidation or what am I thinking? Mortgage rates have more to do with the stock market and investors moving their money around than it does the Fed, because the Fed interest rates affect short-term credit cards, car loans, things like that. The Fed doesn't affect directly long-term loans, but the movement of money moving around will then affect MBS or mortgage-backed securities or other long-term type of deals. That's why when we look at rates, we're always going to look at the 10-year Treasury. We'll go into a deeper dive on that in another video. So anyways, today you're going to look at mid-low sixes on conventional for this week for the most part, including today. And then on the VA and FHA or the Govy loans, with good credit, they're in the high fives with just a little bit of money to get to middle-ish, high-ish fives, depending on the scenario, right? All right, well, this is Mike Florin, Low Cost Mortgage. Have a great day. I'll talk to you later.